Space, defense, cutting-edge tech. We all know the billionaire space race has been dominating the headlines. But what if I told you that one under-the-radar company just quietly positioned itself as a titan in multi-domain space and defense? A company that just posted a massive 56% revenue spike in a single quarter and is sitting on a record-shattering backlog of over $400 million. Strap in, because today on the Daily Stock Drop we are diving deep into Redwire Corporation's freshly dropped Q4 and full year 2025 earnings report. Could this be the breakout stock of 2026? But real quick, before we launch into the numbers, a quick reminder. I am not a financial advisor. This video is strictly for entertainment and educational purposes only. Always do your own research and consult with a professional before making any investment decisions. All right, let's get into the drop. All right, investors, let's talk about Redwire, ticker symbol RDW. They just released their Q4 and full year 2025 financial results, and there is a lot to unpack here. The big headline? They achieved the absolute top end of their 2025 revenue guidance and are entering 2026 with serious momentum. Let's break down the revenue. For the full year of 2025, Redwire brought in $335.4 million, which is a 10.3% increase year over year. But here's the kicker. Their fourth quarter revenue alone was $108.8 million. That is a massive 56.4% jump compared to Q4 of last year. So, what's driving this growth? Redwire's CEO, Peter Canito, stated that 2025 marked their transformation into a fully integrated, multi-domain space and defense tech company. And the proof is in the pudding. They completed the acquisition of Edge Autonomy, a leading drone provider, and have already delivered over 100 UAS drones to 7 countries, including the US Army and Marine Corps. On top of that, they scored major contracts, including a $44 million Phase 2 contract with DARPA for their Otter mission. Now let's relate this directly to you as an investor. What should you be looking at? 2 words: contracted backlog. Redwire is currently sitting on a record contracted backlog of $411.2 million. They also reported a highly impressive book-to-bill ratio of 1.52 in the fourth quarter. For those who might be new to this, a book-to-bill ratio over 1.0 means the company is getting more orders than it can currently fulfill. It's a massive indicator of future guaranteed revenue and strong market demand. But it's not all sunshine and rocket fuel. We have to look at the bottom line. Redwire did report a significant increase in net loss, $226.6 million for the full year. However, context is key here. Management noted that this includes over $130 million in non-recurring activity, largely tied to their recent acquisitions and development stage programs. The good news for the balance sheet? They've been aggressively cleaning up their capital structure. In Q4, they used an at-the-market program to repay $105.5 million in outstanding debt, which they estimate will save them over $17 million a year in interest. They ended the year with total liquidity of over $130 million, a 103% increase from 2024. They have cash, and they are clearing the runway. So, where do we go from here? Redwire's forecast for 2026 is looking incredibly bullish. They are projecting full-year revenues between $450 million and $500 million. The CFO explicitly stated that as they transition their development programs into full-scale production this year, they expect to see solid gross margin improvements. For investors, Redwire is presenting a classic growth story. Heavy upfront investments and acquisitions leading to temporary bottom-line losses, but setting up a massive pipeline of guaranteed revenue and margin expansion for the future. With their fingers in everything from the International Space Station to military drones, RDW is definitely a stock to keep on your watch list. What do you guys think? Is Redwire's massive backlog and revenue growth enough to make you look past the short-term net losses? Let me know down in the comments below. If you found this breakdown helpful, make sure to smash that like button, subscribe to the Daily Stock Drop, and hit the bell icon so you never miss an update on the market's biggest movers. Until next time, stay smart, stay green, and I'll see you in the next one.